Have you ever wondered why moving money feels so slow? We live in an age of instant. Everything instant messages, instant food, instant entertainment. So when you send money, you expect it to arrive just as quickly. But that's not how it works, and the reason why is crucial for your financial peace of mind. Most people think money physically zips from one bank to another, like sending cash in an envelope. The reality is far more complex. Modern money is just data. When a transaction happens, what's really moving are updates across multiple databases in different institutions. Think about it. Your bank, the receiving bank, and sometimes several intermediary banks all need to talk to each other. Each one has to confirm the transaction is legitimate, that the funds exist, and that everything is authorized. The primary goal here isn't speed, it's security and accuracy. Banks are designed to be slow on purpose. A tiny error in a single transaction could ripple out and affect thousands of accounts. A delay doesn't mean something is wrong. It often means the system is working exactly as it should, catching potential issues before they become disasters. This misunderstanding is what creates so much anxiety. When people see a pending status, they imagine the worst. That fear can lead to panicked decisions. But once you understand the system, that fear disappears. So, what really happens behind the scenes when you request a money exchange? Let's say you want to convert dollars to euros. The moment you hit confirm, a series of automated checks begins. First, the system confirms if the currency pair is even supported. Then, it dives into a maze of compliance rules for both currencies. Is this transaction legal in both countries? Does it meet international standards? Next, the bank checks for liquidity. Do they have enough of the target currency available right now to complete the exchange? After that, a risk score is calculated for your specific request. Only after every single one of these internal checks is cleared does the transaction proceed. Sometimes this all happens in a flash. Other times, it takes a while. A delay often just means one of these layers requires extra verification. And remember, verification is not a rejection. It's a safeguard. Banks don't rush these things. They move only when every layer of their system confirms it's safe to do so. This brings us to another source of anxiety: silence. When a bank goes quiet, especially during a period of expected change, people get nervous. The imagination runs wild. We assume silence means bad news or that they're hiding a massive problem. The truth is, banks go quiet during sensitive operations for a very specific reason: to prevent chaos. During major system updates or policy changes, staff are strictly prohibited from speculating or sharing incomplete information. Only officially confirmed, vetted information is ever released to the public. This policy protects you, the customer, and the institution itself from legal trouble and market panic. Think about it: a single premature or inaccurate statement could cause a financial stampede. Silence isn't neglect. It's control. It's a carefully managed process to ensure stability. At the heart of all this is compliance. Compliance is the invisible backbone of the entire global financial system. Every single exchange, no matter how small, must follow a strict set of international laws. Anti-money laundering regulations, for example, apply to everyone equally. Your excitement or urgency doesn't grant you an exception. If your transaction happens to trigger a compliance flag for any number of reasons, it gets paused automatically. There's no human emotion in that decision. It's just the system following its programming. These rules are not there to annoy you. They exist to protect global financial stability. Without them, the entire banking world would be exposed to unimaginable risk. So, when you face a compliance delay, remember it's not personal. It's protective. It's a normal, necessary part of the process. Now, let us talk about something you've probably seen online: claims of special rates or insider information, people whispering about secret exchange rates for a select few, or private appointments with bank managers who will give you a timeline nobody else has. Let me be perfectly clear. This does not exist in the world of legitimate banking. Real banks operate on centralized, audited systems. Their exchange rates are published and regulated. An individual bank teller or even a branch manager has zero authority to change these rates for you. Offering special treatment would violate a whole host of laws and regulations. Banks will not risk their licenses and billion-dollar reputations for a rumor. Real financial opportunities don't arrive in a secret email or a cryptic forum post. They arrive publicly, officially, and for everyone at the same time. Anything else is almost certainly a scam designed to prey on your hopes. This leads us to the biggest enemy of smart financial decisions: Emotion? Financial headlines are masterfully crafted to trigger an emotional response. They use powerful words like breaking, massive, or urgent to make you feel like you have to act now, before you have time to think. Banks do the exact opposite. Their entire structure is built to slow things down, to analyze instead of react. History shows that people who rush into financial decisions based on emotion often lose money. The ones who wait, observe, and understand the process are the ones who protect their wealth. Emotion clouds your judgment. Patience clears it. Learning to stay calm and simply observe is a powerful financial skill. Sometimes, the smartest move you can make is to do nothing at all. So, what does it mean to be truly prepared in finance? It doesn't mean being the first one in line to exchange currency based on a rumor. True preparation means getting your house in order. It means organizing your documentation so it's clear, complete, and easily accessible. It means taking the time to understand the rules and requirements of the financial systems you're using. Prepared people are never surprised by a request for more information. They don't panic during a delay because they understand why it's happening. They aren't dependent on whispers and speculation because they've done their own research. Banks respect prepared customers because they make the process smoother for everyone. Preparation builds confidence, and confidence prevents costly mistakes. This is how professionals operate. Let's zoom out and look at the big picture that most people miss. The global financial system was not built for your excitement. It was not built for speed. It was built for one thing: stability. And stability requires structure. That structure, by its very nature, requires time. Every delay, every verification, every compliance check is a small part of a massive framework designed to keep the entire global economy from collapsing. Those who understand this framework remain calm. Those who don't are constantly tossed around by waves of stress and anxiety. The key is to replace fear with knowledge, replace urgency with patience, replace speculation with observation. This is how you stay ahead of the emotional herd and protect your financial future. Here at Dinar Stories, we don't chase hype. We explain systems. We are dedicated to focusing on reality, not on promises. True financial strength comes from understanding how things actually work, recognizing that not reacting is a form of power, knowing that waiting calmly is a sign of intelligence. When real, significant changes happen in the financial world, they won't be a secret. They will be official. They will be public. And they will not rush you. Until that day comes, stay informed, stay patient, and stay grounded. Thanks for watching. Be sure to subscribe for more insights into the real world of finance.